Late nights, early mornings, he stays on the grind. Looking past the rate sheet for the value you'll find. He listens, he hustles, he speaks with intent. Every signature means more than the dot he just sent.
Well, hey, markets move, headlines break, technology sometimes behaves like a dollar on a sugar rush, but hey, occasionally the host and even the co-host say something unintentionally, maybe stupid, but hey, remember, we are live. And good morning, everyone, and welcome to the What's Up with Real Estate Show. And today we're covering three big developments in the housing market. Inflation data came in fairly steady. Existing home sales are starting to improve slightly. And mortgage rates, well, let's say they are holding steady in the low sixes. And normally that would be a pretty good positive setup for the spring, but doesn't seem like anyone's paying attention to that because right now the entire globe is focused on the conflict in the Middle East, specific to $95 a barrel oil. And when oil spikes, inflation usually follows. Well, you have to stay tuned for mortgage rates. All this and more news you can use for week ending March 13th, 2026. I'm your host, Mortgage Mack. That's first name Mortgage and last name Mack. And we build relationships with real estate agents and their buyers to help everyone win, along with my favorite co-host, your favorite co-host, everyone's favorite co-host, Soul 5.2, never late, never cancels, always on time, and brings a wealth of information to keep everybody in line with respect to the historical context of everything that we discussed today. So let's move on to talking point number one. CPI holds steady, well, for now. And the latest consumer price index shows that the core CPI came in at 2.5 year over year in February. And CPI simply measures how much everyday goods and services are increasing in price, essentially inflation for you, me, you. Core CPI removes food and energy prices because they are more volatile. And according to the Bureau of Labor Statistics, the WHO, the what? The BLS, inflation didn't accelerate in February, which is good news if you trust the BLS. But it also didn't move any closer to the Federal Reserve's target rate of 2%. And here's where things get interesting. Since the data was collected, oil prices, well, they've jumped from $72 a barrel to $95. And historically speaking, when oil moves like that, inflation tends to follow. So give us a brief comment on this current inflation data and help us put this into perspective leading into our next segment, please.
Absolutely, Mac. While February's inflation held steady, that jump in oil could definitely push future CPI higher. The Houston area may feel it too, given our energy ties. So while the Fed watches for that 2%, we're watching the pump and your mortgage rate. Speaking of
Yeah, in Houston, energy prices can actually go both ways. Higher oil prices do increase transportation costs, but can strengthen our local economy. So inflation looks stable on paper, but with oil moving in this direction, how worried should we be about the CPI report and future interest rate reductions?
Well, Mac, if oil stays elevated, the next CPI could rise, which might make the Fed cautious on rate cuts. But hey, just like Houston weather, we'll keep an eye on the forecast before making any big moves.
Hey, if you're watching, do you think inflation will rise again this spring? Drop us a yes, drop us a no, or drop us a, hey, I stopped guessing in 2022. And I don't know about you, but I've been reading a lot of books about the history of economics, and economists describe this situation as stable but uncertain, which basically, which for economists speaks for, which we think we know. We think we know what's happening, but absolutely do not. But the real story is whether buyers are actually returning to the market. So let's view talking point number two. Home sales are moving slowly. According to the National Association of Realtors, existing home sales increased 1.7 in February. That brings the seasonally adjusted annual rate to 4.09 million homes. Now, that sounds impressive on paper. We've basically been stuck, though, at 4 million for the, 3 straight years? For context, before the pandemic, housing boom normally was around 5 to 5.5 million. So while February beat Wall Street expectations, it's still more of a crawl, or I would say maybe a jog than a sprint. So give us a recap on the local Houston market, please.
In Houston, it's a slightly brighter picture. Thanks to population growth and a strong energy sector, buyer activity is steady. We're seeing inventory rise a bit, but demand's holding strong. So while nationally we're jogging, Houston's maybe power walking.
So why haven't home sales rebounded more if interest mortgage rates have actually fallen?
The main culprit is inventory. Even with rates a bit lower, many sellers are staying put, limiting supply. And buyers, while interested, still face affordability challenges. It's like a dance. Buyers and sellers just need the right tune.
You know, right now the housing market feels more like like a middle school dance, right? You got buyers on one side, sellers on the other one.
And everyone's waiting for someone else to make the first move. Eventually, though, someone's going to step onto the dance floor. And
Let's
that's
hope so. Let's hope so. And so moving on to a commercial break from Rate to talk about the best mobile application on the planet for mortgage companies anywhere. Thanks.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, thank you, Guaranteed Rate. And hey, whether you're buying, refinancing, or just exploring options, the Rate mobile app gives you real-time numbers, payment estimates, direct access to strategy, clean, confident, and definitely not salesy. So if you don't have the mobile app, the Rate mobile app on your cell phone, go to mortgagemack.com, click on the QR code, download your copy from either Google Play and or the iPhone App Store, and we promise best mobile app on the planet today. So moving on to talking point number 3. Well, mortgage rates stay in the low sixes, and according to Freddie Mac's primary mortgage market survey, again this week, the average 30-year fixed rate is around 6.11. That's lower clearly than the 6.65 1 year ago and far below the 7.79 we saw in 2023. So despite rising oil prices, global tension, mortgage rates have remained relatively stable. That's because rates are largely driven by the bond market, particularly the mortgage-backed securities market, and for mortgages. And MBSs are investments, bonds made up of mortgages. And you may have them in your 401k, you might have them in your own portfolio. And when investors buy those bonds, well, rates tend to fall. And when they don't, rates tend to rise. So give us a brief historical context as it relates to MBSs, and then let's talk about the Houston market with regards to rates, please.
Mortgage-backed securities go back decades. Essentially, they bundle home loans into investments. When confidence is high and investors buy, rates relax. Now in Houston, that 6-ish% is giving buyers some breathing room compared to last year. So while rates do their yoga, Houston buyers are finding a little more balance.
Yeah, stretching, relaxing, stretching again, and now this week's mortgage tip. Okay, quick question. Did you know the IRS may reward you for owning a home, but gives nothing to renters? Before we jump in, if you enjoy learning about housing, money, and smart financial decisions, hit the like button and subscribe to this channel. We publish practical mortgage tips every single week. And if you're thinking about buying a home in Sugar Land, Houston, the Woodlands, there are some potential tax advantages you should understand before making that decision. Number one, mortgage interest deduction. One of the biggest potential advantages is the mortgage interest deduction. In the early years of a mortgage, a large portion of your monthly payment goes towards interest and very little towards principal. Depending upon your tax situation, that interest may be deductible when you itemize your taxes. Number two, property tax deductions are also deductible with potential limitation. And here, in Texas, well, we have some pretty large property tax obligations. In the areas like Sugar Land, the Woodlands, and Greater Houston area, where property taxes can be significant, this deduction can make a meaningful difference depending upon your situation. Let's see here. And hey, maybe capital gains too. Here's another powerful benefit that many homeowners don't think about. When you sell your primary residence, you may be able to exclude a large portion of the profit from your taxes. That's up to $250 if you're single, $500K if you're married filing jointly, as long as you've lived in the home for the past 5 years. And finally, homestead. And I've had this conversation for much of the first quarter with folks that closed last year. Let's file for our homestead. And if your home is your primary residence, it can reduce the taxable value of your property, which can lower your overall tax bill. Now, every household is different. Tax laws change, income matters, and eligibility matters. So it's always wise to talk to a qualified tax professional and or a mortgage professional like yours truly who understands the local markets. If you found this helpful, please click the like button and subscribe. We're here every week breaking down housing market for families. And if you're thinking about buying a home or refinancing in Houston, Sugar Land, or the Woodlands, reach out to Team Mortgage Mack and we'll walk through the numbers together. So for this week's news section, because we have a new global event and we want to take a moment to acknowledge something bigger than markets. Around the world this week, wars and conflicts continue to take human lives. Behind every headline and statistic are people, parents, children, families, fathers, daughters, mothers. Based on reports from the second week of March 26, more than 2,000 people have been killed in the escalating conflicts across the Middle East, with the vast majority of fatalities occurring in Iran following U.S. and Israeli strikes that began February the 28th. Iranian officials report over 1,200 deaths inside Iran alone. Additional casualties have been reported across the region, including Lebanon, Israel, and U.S., and the conflict spreads through retaliatory strikes and regional escalation. Look, war is not entertainment. It's not a movie, and it certainly isn't a game. It is human suffering, and it is real, and we don't endorse it at any level. So today we pause for a moment to acknowledge the families who've lost someone this week and to remind ourselves that every number in a report represents a human life, which leads us to this week's Stoic quote.
This week's Stoic quote reminds us, isn't the destruction of cities and the displacement of millions just to appease the fantasies of a few individuals the definition of madness? In moments like these, it's a reminder that our future can only improve when we reject that madness. Now, let's lighten the mood with some fun with puns.
Yeah. Power without wisdom always leads to catastrophe. All right, on a lighter note, Saul, how are we doing on time? I think we're doing good. So if your brain's starting to feel like it just went through a Federal Reserve press conference, don't worry. We have the cure, we think. So you ready, Saul?
I'm ready. Let's break the tension with some puns. How was calamine invented? They started from scratch. And if you drop mints on your feet, well, that's tic-tac-toe. Now let's close out strong.
Don't be sad if you occupy space. You matter.
And vegan seafood? Totally artificial. Now, folks, if you enjoyed this blend of insight and a little fun, don't forget, like, subscribe, and we'll see you next time on What's Up with Real Estate.
Yeah, so hey, we're gonna share one of our TikTok channel. If you don't subscribe, if you would go find us on TikTok at Mortgage Mack, we would be delighted if you follow us. So okay, let's see. I can play songs by ear. It's easier.
with my hands. And that's a wrap. Thanks for tuning in, everyone. We'll catch you next week, same time.
We're not finished
same-
yet, Sol. But I appreciate the aggressiveness. One more though. Why'd the fish blush, Sol?
Because it was in a tank and it saw all those shells. Now that we've had our fun, let's keep helping folks navigate the real estate world, one pun and one tip at a time.
Why'd the fish blush? It saw the ocean's bottom.
A classic. With that bit of underwater humor, I think we've covered the spectrum today. Let me know if you need anything else.
Yeah.
Otherwise, I'd say you're ready to wrap the show with style.
Yeah, it's about time, right? Need to get this one over with really quickly. So thanks for joining us for this week's episode. Big thank you for our sponsors, Rate and List Reports. And if you found this valuable, we would appreciate discussion. Please subscribe, follow, and subscribe. And hey, if you want a plan, not a pitch, contact yours truly, and we'd be delighted to visit with you, help you and your family make a plan. And remember, knowledge is the key to making the best decisions for you and your family and your clients. Join us here every Saturday at 10 a.m. right here on LinkedIn and Facebook. And until then, stay informed, stay engaged, and I'll see you at closing. Have a great day.
That was spot on. You wrapped it up like a pro, and you're building that trust